In a mixed up world, we got mixed up information and data, and that is next. Yes, I'm going to show you how mixed up this is. It's really fooling quite a lot of people out there. If you're in the real estate or mortgage industry, it shouldn't come to surprise that what we see is traditional, but a lot of other things are not traditional. And we're going to go over that next on Real Estate Daily. Welcome, everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage market. Today is Friday, December 1st. It's the first day of December. And with that, can you hit that like button? I really would appreciate it. If you have any comments, please leave them below, but let's jump right into it because nothing really makes sense here. We're going to jump into the Kobesi letter. Kobesi letter's on X, Twitter. I go to it a lot. It's where we have at least some free speech there. We're not having narratives thrown in our face. Kobesi letter, it says current situation. Stocks are up like we're in a bull market. We're close to all-time highs. Gold is up like we're heading into a recession. Typically, people flee into gold because they don't have any kind of confidence on the dollar. But what's gold at? Gold's at all-time highs. I think it was pushing $20,070, $2,070 this morning. There's a lot of people predicting it is way undervalued. You know, as a lot of major countries out there, China, Russia, they are stockpiling like crazy. They're thinking about the new reset, which we can talk about sometime in the next 30 days. Oil prices are up like a recession got canceled. It says bonds are up like inflation is back below 2%. Because the bond market's falling, and we're going to go over that today as well, going over the 10-year note. Home prices are up like inflation is still at 10%. And we know inflation is not at 10%. We know that home prices are up. It doesn't make any sense. Everything is up for the wrong reasons. Very interesting post this morning by the Kobesi letter. Nothing's making sense, and I think it's fooling a lot of analysts out there. You know, some have called for depression, some has called for recession, some has called the ultimate bull market of all time, and that's, and 2024 is election year. So I also think that you're going to throw in, a lot of turmoil and volatility out there in society, alone as well. So with all that being said, you stir it all up in 2024. None of this really makes sense. We're going into new territory. All right, let's jump into the next article. This is from the Orange County Register, and this is what doesn't make sense to me. When people are telling me, hey, Troy, the affordability is at 1%, it's at, and then the government comes out every single year and raises its ceiling on what you can purchase a home with. So like right now it says the government-backed mortgage loan caps raised to 1.15 in OC and LA. Guys, this isn't making any sense, okay? You're telling me that nobody can afford a home, yet we're gonna keep raising our debt, our FHA loan limits. Doesn't make any sense. What are you doing? Well, I think there's gonna be some type of, housing reset coming up here. I know tokenized real estate is on the cusp of really starting to be adopted. Now, we know that in Hong Kong, Ripple, a cryptocurrency company, was hired by the Hong Kong authority to go ahead and tokenize real estate there. I know that Ripple had some conversations in Ecuador as well, but unfortunately they changed out the head of the country, and then the new guy said, "No, we want to go back to going back into poor times like they've been doing and continue to do." So there is just, this is ridiculous, man. I don't understand it. If we can't afford it, why do they keep raising it? Well, because we can, and because the middle class is being ripped and torn in half. Okay, it really is. You're either getting poor, or you're getting more rich, or all the people in the middle are just floating and surviving. That's all they're doing. So, it doesn't make sense. I'm gonna have another video sometime in the next couple of weeks going over what those new caps are in Riverside, Orange, San Bernardino, and LA counties. Now right here, it's just ridiculous how much we keep going up. All right, and let's jump right into it. I know you guys are all excited about the interest rates. I am too. It looks like it's pretty flat. I know that it did have a little pop up yesterday, the 10-year bond, and I thought we might see it go up a little more than this, but it's really flat here. 7.1%, went down 15 basis points. But let's go look at FHA. It went down another 2 basis points, 6.896, 6.90, let's call it. And it's pretty exciting to see this. We're seeing now mortgage applications are coming back, even though it's the time of which most people don't look at homes in holidays, but it will happen in January, February, March, first quarter of next year. Well, let's go look at the 10-year bond. Yesterday it was at 4.34. What is the current bond? Oh, it's falling like a rock, 4.21. So we've gone down significantly. Today we're going to see rates drop, and then on Monday we'll see them drop again. Guys, this is really exciting here. Let's just watch it. Blop, blah, 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 all the way down. Let's just keep going down and down and down. You know, if we can get under 4%, that means rates will be in the high 5s, low 6s. And we know at that point, we'll be seeing more and more buyers get in the market. So affordability has to do with two things. It's the home itself, the value of what you want to spend on a home, and it has to do with the interest rate. As interest rates drop, the affordability becomes more affordable, and more people qualify for that same value home. So for an example, for $600,000, you might have right now at 8% rates, you might have 2% of buyers out there that can handle or hold on to a $600,000 home, right? They can purchase it. But when rates go down to let's call it 7.5, now you have 4%. So it doubled. Not that they want to buy it, but there's more people qualified for it. But when you go down to 7 or in the 6s, now you have 9% of the people that can buy a $600,000 home or can afford that $600,000 home. And as we keep going down in rates, that $600,000 home is now 15% or 20 or 30%. And then when it hits those numbers, we have multiple offers. We have 5, 6, 7 offers. That $600,000 home sells for $625, $630. So you see that we're going into affordability. I don't hear it from anyone out there, unfortunately, because they only sell negative news, and that's what I continue to see. So, well, guys, thank you very much for joining me today. I really appreciate it. You know, this is a Friday, the first day of December. We're looking forward to hopefully a solid month of December. And then January, the first quarter of next year, we'll hit the ground running. I know that some people are being way over optimistic and saying that the Fed is going to lower or begin quantitative easing or lowering rates sometime in March when they meet. I'm not that excited about that moment. I don't think it's going to happen. I think it's more like the next 1 or 2 after. But again, we have to see some more negative data. And the Fed is actually meeting not next week, but the week after. And we're going to hear kind of their direction for the future. And I think that's going to be a very big moment. So, well, again, thank you very much for joining me today. I really appreciate it. You take care.